Hi, I'm Harper with Life with Leverage, and we coach you on how you can become your own banker. Today, we're going to talk about, am I too old for infinite banking? I get this question quite often, since in the infinite banking world, we are utilizing specially designed whole life insurance contracts with mutual companies. You are going to have to go through underwriting, which is not that invasive by any means, but they're going to look at your health and longevity. With that said, even if you're into your 40s, 50s, 60s, 70s, and even 80s, you are able to still get a policy potentially on yourself, your spouse, or someone you have insurable interests with. So let's start with ourselves. Let's say, for example, I have people I'm talking to and say they're 60, 65, or even 70. They're like, hey, the premium's going to be so expensive, or am I even going to get approved? And the answer is it depends on the scenario of your health and your longevity. So let's just say, hey, you're reasonably healthy. Great, we should be able to get approved. And if we're going to get approved, you're like, oh, the premium is going to be so expensive. It's not about your premium being an expense. And previously, I did a video, I believe it was actually the other week, on your premium or premiums are not an expense. And we're looking at how that's capitalizing a policy and actually accumulating cash value for you that you can use as an asset. Now, let's say we start paying a higher premium, like quote, quote, right? Because people are like, hey, it could be an expense or it's more expensive. The thing is, yes, you're going to pay a higher premium for the same amount of death benefit that someone would pay when they're younger. They pay a lower premium for the same amount of death benefit because they are younger. They have more lifespan. But that doesn't mean that when you pay a premium, you're getting less cash value. So when you pay a premium, let's say at age 65, you're going to get what's called cash value within the life insurance contract. That cash value is going to grow and accumulate with interest and dividends throughout the life of the policy. And since your time frame is actually shorter from when those contracts are written out to, so now life insurance policies endow or they go to age 121. Not that you would necessarily pay premiums that long, but they go to 121, and that's where the death benefit actually equals the cash value. So if we're at age 65 and you're starting to put premium in, the premium might be more expensive for that death benefit, but you're actually able to get more cash per death benefit within the contract, which typically later in life, you're wanting to get more of your income or savings into a potentially creditor-protected, tax-free environment if handled properly. And then the death benefit's always going to be a multiple of what you contributed and premiums within the life insurance contract that you can pass on to the next generation, income tax free, which is a great way to do some more advanced planning or generational wealth transfer, potentially parlaying into estate planning, getting out of your estate and estate taxes. Now that's a more advanced topic I'll get to at another date, but we could talk about that if you'd like. You could just reach out. Now, that's kind of factoring in just yourself and a policy. Let's say, hey, I don't want to get a policy on myself. I have enough insurance coverage, or I would like to do it another route. No problem. Or let's say, yeah, you're uninsurable. Let's say you get your spouse, and you get a policy on them, and you can own it and control it, be the beneficiary and the owner, and it would just be on their life or insured, and you can use that, right, and utilize the cash value for infinite banking that way. You could put it on your kids, you could put it on your grandkids, and you could end up insuring business partners or other people that you partner up with to have insurability. So there's numerous ways that you could practice infinite banking with people that you have insurable interests. So no, you're never too old. And even if you are getting older, being able to cycle more cash in per death benefit can actually be a good thing depending on how you're trying to transfer wealth, move it around, or get it within these life insurance contracts to act as a ideal savings vehicle. Now, if you'd like to talk further, you can go to lifewithleverage.com, or you can reach out to me at harper@lifewithleverage.com.